Hi, and welcome to another daily recap. So, this is day 74 of my trading journal, and it's August 8th, 2024. So, I'll just share you the quick synopsis of what happened in both EU, GU, as well as XAU. In EU and XAU, I didn't get in trades. There was some trading opportunities in EU, but there was no tax for me. But in GU, I took one trade and it's a winner. So, I'll explain to you in a quite a few moments. Okay, if you want, you can just skip to the only GU because in EU and XAU there will be no trades. But I'll suggest that you can see the full analysis and see why I didn't get any trades and how I didn't get into FOMO. So let's begin with the EU daily. So this is a daily chart of the EU and EU. This is the swing, strong swing high, and this is a weak swing low, which means that the swing structure is actually bearish. So the internal structure is bullish, and price actually took out this weak internal high, which means the strong internal low would be shifted here. Okay, price also swept the buy side liquidity above the strong swing high, which means it has all the ability to come down. Also, there is this huge fair value gap, so I'm expecting the price to come down to liquidate the fair value gap. I mean, this would be the daily target for me. So this is 4 hour. This 4 hour is the swing structure is bullish and the internal structure is also bullish. So this makes this as a strong internal low and this as the weak internal high. So since the price mitigated this 4 hour demand, I mean 4 hour supply, and there are no other 4 hour supplies above. So this is the only valid 4 hour supply which from which the price can react to. And one more thing, there is a low resistance liquidity, and also we are expecting the price to come down to mitigate to fill this daily imbalance. So ton of confluence is adding up, but the only negative confluence is that there is a strong internal low. This strong internal low, there's this POI which is not that much valid POI, and price didn't show a strong reaction of this POI. So we can say that this strong internal low would be taken out today, and the price can start the swing pullback phase. That is a phase C in 4 hour time frame. So it's very clear that today the price is going to go down. It's very, very obvious. So you can see the low resistance liquidity here. So yeah, this is the only risk factor. It's expecting the strong low to hold to push the price further up to mitigate the daily supply. And yeah, one more thing is that there is also this daily supply which the price can push up and mitigate this one. For that to happen, this strong hold to, I mean, this strong internal low should hold. So kind of mixed signal, but my intuition said that okay, because this is immediate liquidity, this is immediate liquidity, and there was news at 13:30. So definitely, and also news for me, what I realized is that news always targets strong structures. So there is low resistance liquidity as well as strong structures. Definitely, my intuition said that okay, price is going to go down today. Definitely. This is H1, and H1 is swing structure is bullish, and the internal structure is bearish. So this is the current internal structure that I'm dealing with. So this is a strong internal high, this is a weak internal low, and same you can see the low resistance liquidity here, and this is a chalk line. If the price makes this bearish chalk, then I would be interested to sell until it takes out this weak internal low. You can see this is my game plan. So looking to take the phase C shorts today, all I want is a price to mitigate the 4 hour supply and then the H1 to chalk bearish. Very simple chalk bearish POI here. I may even take risk entry or if possible M15 LC1. If not, I'll be able to take, I was ready to take the H1C, I mean H1 risk entry. I'm also ready to take the H1 risk entry if the H1 chalk bearish, as there is a ton of sell liquidity taken and it is a very high probability setup. So for me, my intuition tells me that okay, definitely the price is going to come down. There is a high possibility, not probability, high possibility that the price is going to come down. And at 8, exactly at 8, price mitigated the 4 hour supply, and I was waiting for the H1 to chalk bearish. And yeah, chalk bearish came. Thing is that I should have entered with the H1 risk entry, as I already told you, but I waited for LC1 model, but LC1 was right above here. So I was looking for the price to come down, I was looking for M15 confirmation entry. Initially, while planning, I was aggressive. I want to take the aggressive trade, H1 risk entry. But while executing, I myself becoming a bit conservative, looking for, bit conservative entries. So now I'm trying to understand myself. So I am a bit conservative. While planning, yeah, it sounds great. Taking, it's very high probability. I can take the risk entry, and yeah, price actually went down rapidly down. You can see this is the way the price went down, but I didn't take the entry because there was no LC1. LC1 was right here, and there was no confirmation entry because the price, this candle around 13, yeah, this candle actually took out was a single candle which took the price like this. Boom. It was a single candle. So I was not able to catch the move, but yeah, I should have taken the risk entry as per the game plan. But different persons have different personalities. Now I understand that I'm a bit conservative. So I should not, aim for risk entries, plan for risk entries, and be upset later not taking those risk entries because now I understood that I'm a bit conservative. So I must plan as per my personality. So, okay, yeah, this is 1252. Price mitigated the expense supply, but it is almost impossible to get a trade from LC models because even the range is very short and it is difficult to get an LC to A, and the LC1 liquidity is right above here. So I don't expect the price to go all the way up here and then push down. No. So the only option would be to make a EMP15 confirmation entry and then take trade from the festive from POI or from the 61.8 pip level. So this was the EMP15 confirmation entry, and there was a ton of sell liquidity, and easily the price should push down 61.8. Boom. That was my expectation, but the price went down in a single shot, so I was not able to get any trades today. So I probably set up, but there was no tag, so it is what it is. So there is nothing to worry, still it is a very large range. So again, today I can expect the price to sweep this liquidity again, chalk bearish, especially from POI. I this time I'll take risk entry and then target this week internal because this is also a lower resistance liquidity building up. So let's see what's going to happen the next day. I mean this day. For now, there is no trades on August 9, 2000, August 8, 2024. Okay, okay, let's jump into GU and see what's there in GU. I mean, let's see how I took the profit in GU. Thank you guys. Bye. And let's start with the GU. So in GU, I got, as I already mentioned, I got a winning trade today, which is 2.5 hour, which is, I follow fixed, fixed take profit protocol. So 2.5 hour is my optimized take profit level, and the entry time frame is M15, and I entered using M15 confirmation entry. So let's jump into the daily and see what is the daily saying us. So in daily, the swing structure is bullish and the internal structure is also bullish. So this is a weak swing internal high and this is a strong internal low. So price has tapped into the daily demand and it has also mitigated the pivot demand, which I was mentioning earlier. So price can now start to go up. It has because it has tapped into the daily demand, strong low is there, and there's a ton of lower resistance liquidity above, which the price can easily go up and make and take all those price liquidities. And this chalk line is right here and not here. So once the price makes a bullish chalk, that would be a very high probability case for me to look for longs and target this weak high. But for now, price can either start reacting and then push up, or it can go a bit down, to tap into the mid portion of this pivot, and then it can push down, push up. So I'll be looking in the lower time frames and then entering with their order flow. This is the fora. The swing structure is bullish and the internal structure is actually bearish and it's in swing pullback phase. So price has mitigated this daily demand, and this is the internal structure of the 4-hour time frame. This is a strong internal high, and this is IBOS, and this is not a kind of internal pullback that I was expecting. So I term this as a small swing, means a small internal weak. This is a sub internal structure, you can say like that. Because this small weak low did not cause any major MSS, but this could be easily taken out. In fact, this would be my draw on liquidity for today's session. Yeah, okay. This would be my draw on liquidity because there is a chalk here, internal chalk you can say. So price is definitely bearish, so it can easily take out this peak because this low did not create any significant structure shift, right? So this low can be easily be taken out because it just took out this high and filled the fair value gap and chalk bearish. So ton of confidence that the price will come down and take out this weak small internal low. So that was my drawn liquidity for today. once this, because the high time frame bias is telling me, the daily is telling me to take long, because the daily is in the price is in the daily demand, and it has entered the daily pivot, and it's almost, if I if I take the fib level from the starting of the order flow, is it here? Price is almost 60-30% of the daily demand, which is far more enough for the price to react and move up. And also there is daily buy side liquidity, which is low resistance liquidity. Easily the price can switch bullish. So all the confluences were there for the price to go up, but immediate price action would be the price would target the swing weak internal small sorry, weak small internal low. So that's what I'm going to target, at least in the London session. So coming to H1, H1 is swing is bullish, strong swing high, weak swing. The swing low is not yet formed because I haven't seen a significant pullback to term this as a swing low. So I term this as a weak internal low. Okay, here you can see the price. Actually, when I came to the desk very late. It was around 9:30 GMT plus one. So at the time when I came, the price actually tapped into this demand and then pushed down. So I could have entered, you know, trades from here because it's a very small range. So if I got a valid LC2 model, I could have entered shorts from here. But when I came to my desk, price was already chalk bearish. So double confirmation, price mitigated this area of supply, and then price pushed down and it is chalk bearish. So here you can see this is a good POI from which I could look for shorts, and yes, it indeed reacted to this POI and then price went down. I missed this trade and I was late to my desk to have the office works. Nevertheless, H1 is now chalk bearish. Now I have more confirmation that the price is going to take out the weak internal low. Thus, I can either get a winning trade today or I leave the rest without losing any money. So it's as simple as that. You know, you should not worry about, oh shit, I missed a trade. It's about, it's not like that. Yeah, I know. See, there is a quote that nothing will happen, you know, because things won't happen, naturally. It happens because of you. If you are late to the rest, so you missed the trade. So you must not be blaming to the market that shit, I missed the trade. Why did the market uh, went so early? It's not a talk that should be going into the mind. Rather, like, just have a positive mindset. If it's a profit, profit. If it's no trading trade, no trading trade. That's it. Definitely, I know that the price is going to go down. High possibility that the price is going to come down. So, and this chalk, so I decided to take, since it's a very small range, very tight range, so I decided to take the M15 risk entry using this. You can see this is the H1 chalk bearish. This is M15 actually, H1 chalk bearish, and I took M15 risk entry. I didn't waste any of my time. I just took the M15 risk entry and placed my stops above because it's a very small range. So I was able to get 2.6 R. So this is 61.8. I just placed. So this was the M15 POI. So I just placed slightly below and stop loss just above, and then 2.6 R. If I placed above here, I would have got 2.8, but I don't want to miss this trade. And boom. Actually, price went above the 61.8 and then pushed down in this. And in 1 hour, I got my profits. And after taking this profit, I know that the daily is almost mitigated. I mean, the buy orders in the daily demand is almost filled. So this is high time that the price would go up and take out this strong high, and then it can start the swing, the H1 swing pullback. So definitely this POI is now invalid because it has no lead. So definitely there would be a ton of buy sell liquidity over here. So price can take this buy sell liquidity, change the character, and then start the order flow. So that's what I was looking to play the phase D longs, because price reacting from the high time frame POI. So if the H1 chalk bullish, then again freshly from POI, I can take the M15 risk entry or M15 LC1 models if it's available. So there was none of them. So you can see price went down, and price didn't actually make a bullish talk. Rather, it just rallied up and then took out the internal high. So this screenshot was taken today, and this all these screenshots were taken during the session yesterday, August 8, August 9. Okay, that's it from today. So yeah, GEO is a very good trading day, and there were a ton of risk factors involved. But when you are having a clear drawn liquidity, so we should not hesitate to take trades. So just take trades, just take the profit up to the drawn liquidity, and then either you can if your take profit is very large, either you can break even your trades and protect your stop loss, or you can just take partials or just take whatever the profit till the ground liquidity gives you. Very simple as that. Okay, guys, let's jump into XAU and see what the market, what how I traded the XAU on day 74. Thank you. So in XAU, I didn't get any trades today. Finally, actually, market came out of consolidation today, and maybe expecting a couple of trades in the coming weeks. Okay, let's see what the market has. This is the daily chart, and the daily is actually swing bullish. The swing sector is bullish, and the internal is also bullish, and the daily is in the price is in the daily demand. So it's obvious that this demand should hold, and the price can push up because price has already mitigated the 61.8 level of this swing range. So and it has also high bossed up. So high chance that this demand can hold and the price can push up. As expected, price now mitigated the daily demand and now expecting the strong internal to hold and the price to continue its bullish trend to take out this weak swing high. So this is the 4-hour chart. This is the swing structure is bullish. This is the weak swing high and the strong swing low is somewhere in the bottom. Yeah, here it is. This is a strong swing low. This is a weak swing high. This is the internal range that I showed previously. So this is that internal range. So the swing structure is bullish. Internal is bearish. Yeah, internal is bearish actually, and it is actually not swing pullback phase. Yeah, actually swing pullback phase started and then phase A started. Again swing pullback phase started. If you see in the immediate price action, it may seems like it's a swing pullback, but if you see it from the previous price action, you can see um, internal boss, high boss, a bearish high boss, bearish high boss, bullish high boss, bullish high boss, again bearish high boss. Simply say in simple words, the price is consolidating within, but the consolidating range is very large, so we can trade from the bottom of the range to the top of the range. So, but that's what I'm going to do today. So the immediate price action is the internal structure is actually bearish, and this is a weak internal low, this is a strong internal high. So, and yeah, one more thing is price is consolidating within this range also. You can see this is kind of an ascending or descending triangle pattern. This means that neither the supply nor the demand is in control. So I can't trade in these low probability conditions, right? So I was expecting today the price to come out either of this buy side, break out this buy side resistance or this sell side resistance. Anything? This is H1. Okay. This is H1. Here you can see the ascending triangle pattern, and I've drawn this here. So the swing structure is bullish and the internal structure is actually bearish. Price liquidated this buy side liquidity in the sell side liquidity. I expected the price to continue, going up because it has taken a strong sell side liquidity. And here is H1, a strong low, and price is in the daily demand. So there is high chance that the price can continue to go up to take out this weak swing high. But once the price took out this buy side liquidity, price pushed up rapidly, made a V-shaped reaction, and the fuel ran out. Once the fuel ran out, price needs to engineer liquidity, engineer to fuel its moment upside. But we don't know once the liquidity is created, we don't know which liquidity that the price is going to take, and then in which direction that the price is going to move. So we need to wait for the price to show the direction and then take the trade on the pullback. Essentially, I told you in the previous daily recaps that I am essentially a pullback trader. I'll determine the direction, I'll determine the order flow, and then I'll wait for the pullbacks, and then I look for low time frame entries and then enter the trade. That is the holistic view of my trading strategy. So swing is bullish, internal is bearish, price is a kind of forming an ascending triangle pattern, which is much visible in the H1 chart. I'll be in the sidelines till the price breaks out and gives me clear direction. So I was focusing on U and GU at this moment. So in the New York session, price took out this buy side liquidity. So this could be kind of that concept of AMD, that is accumulation, manipulation, and distribution. So here is the accumulation. Here could be the manipulation, and price could come down as a distribution. So that was my thought process was going on, but price is in the daily demand, and price made a strong liquidation below, and it has pushed up, ran out of liquidity. So it is engineered liquidity for probably to go up because price swept is still liquidity to go up. So now it's engineering this liquidity probably to go up. Ideally, it should have taken this sell side liquidity and then pushed up, but so this created kind of mixed signals in my mind. So I didn't just jump into the trade. I wanted to wait for the H1 to chalk bearish and then enter the fresh supply to target the sell side liquidity and then ultimately the weak internal low. I just trading in line with the H1 supply, H1 order flow. And here you go. There was a ton of emotions running in my mind whether to take this trade or not. So this trade is actually a phase C trade. So these are the phase C conditions in non OTE. Price has already tapped into the extreme of the swing range, so it is not advisable to take trades to target this weak internal. Now the price is looking to go up. At this time, it's not advisable for me to take shorts. So this box is not ticked, and the high time frame narrative doesn't support this medium time frame idea. So, but this MTF POI has around 4 by 8 criteria met, and there is a bearish S&P divergence. And this trade is also not in line with the medium time frame order flow. So, what can I do? And point of interest criteria. So this POI has swept liquidity, it has displacement, and it's made a shift in the order flow, and it's unmitigated, and it has an inducement. So six confluences have been met. And what are the risk factors? Trading against the high time frame objective, trading against the H1 strong swing low, trading against the medium time frame order flow, and also there is another POI which the price can go up, and then the price can come down if the price is going to come down and take out the weak internal high. If so, those were the risk factors. And so what is the actual high time frame narrative? Daily has reached the discount prices of the swing range and it is in the daily demand. Just remember the daily price action, or if you can, you know, come backward and see the daily analysis and jump to this spot. I'm expecting the price. I'm expecting that the price to respect the daily demand and then go up to take out the daily week swing high. This is against my current bias of taking shots. Then I decided to take shots till the price reaches this H1 demand. You can see this is the H1 demand till which the price can go and then the price can shoot up. But again, this is a 2-7. So again, I thought of placing the risk entry. Then I realized that this is very too short for me to take trades. And even if the price was stopping around, even if the price tagged me and then it's starting to go down, like after after 2:30, like traveling. I'll be in a, I'll be traveling. So that last half an hour, I would not be in my desk actually. So I don't know how to monitor the trade. So just left this because there was so much of conflicting factors also. So I just left this trade and my intuition didn't play out this time because too much of conflicting factors. See, I'm deciding not to take this trade idea as there is not enough confluences for me to execute the trade idea. Also, the news at 13:30, this is the 13:30 news scandal, did not cause significant change in the market structure shift, in change in the market structure even at the M5 chart. Yeah. One more thing is that 130 news, you saw in the GU and EU, the price went down rapidly, which means there is an appreciation of the US dollar. That's why the overall currency value has been decreased. Here in XAUSD, still there is appreciation of the US dollar, but that appreciation is not reflected in the chart, which means that the gold is appreciating more than the US dollar. So the demand is still in control than the supply. This indicates that the appreciation of gold is much more strong than the appreciation of US dollar. Sorry, gold is much more strong than that of the appreciation of the US dollar. Typo error, sorry. In other words, I can simply say that the demand is still in control, and this could be a temporary shift in the market structure before the demand steps into the market and pushes the price up. These are all are very deep analysis. If you have conflicting factors, you tend to analyze, add extra points, go to the basics and dig down. So what adds some additional points to your bias. So you can clearly see that I am adding confluences after confluences for not taking the trade, which means clearly my intuition is saying not to take the trade. Simple, right? So I just didn't take the trade, and this is what happened. Price actually pushed up, and it could have taken my stops. So it is what it is. So I didn't take any trades in gold. So let's see, maybe tomorrow I can utilize this opportunity, and now the price is in the expansionary mode, so I can take some good trades in the future. Thank you guys. Have a nice day. Cheers. Bye.